Hello, I'm Liz Lumley of Finextra, and today I'm speaking to FB of EPAM and Mark Butterworth of Aptitude Advisors, and we're going to talk about digital change and innovation in the banking industry. So FB, I'm going to start with you. I mean, digital change and advances in technology are really changing the way businesses interact with their clients. So it's really imperative that banks are at the forefront of this change. What can banks do to really accelerate innovation and digital and working with digital technologies?
I think what banks should do and what banks can do is different. I think they should become digital organizations, technology organizations, but they cannot make this jump today because they still believe that they are a financial institute with an IT department. So they have to select good partners who can actually take them there, take them to the next level. They can become a real technology organization. They have to select partners who can bring them innovation and help themselves, help the bank itself to transform.
So that's interesting. You talked about working with partners. I'm going to move on to you, Mark. I mean, a long time ago, banks did everything in-house. Now they're really looking outside to work with partners to take advantage of innovative technologies. How can banks choose the right partners to work with that will give them value and not just add to their headcount?
So as part of my previous role at a large bank, I was responsible for running a team that's used to manage the relationships with all of the large service providers. And at least once a week, one of them would come knocking my door trying to sell another 50, 100, 200 bodies. And effectively, they've been seen as the cash cows. Banks have been seen as the cash cows for that industry for far too long. Our view is to really look at the service providers that are really willing to cannibalize their own revenue streams and be able to work with and partner with innovation firms to actually bring a very different offering to the table. For example, if you think that actually almost every bank at the moment has a data strategy of a sort, there is a CDO or a data czar that exists. There are plenty of big data migration programs that are going on across these organizations. We have a specific use case that we've come across that actually brings a data migration software firm with a services provider together. And the combination of the two has had dramatic impact, i.e. we've reduced the number of people down to a much smaller core of real specialists and importantly embedded it with software. And the results have been alarmingly fantastic for the bank. It's reduced the delivery times from 9 months down to 6 weeks and importantly reduced the cost down as well as part of that. That is really what we're calling a software-enabled services go-to-market, and that is what we think banks really should be looking for, is partners that are willing to go down that approach.
Time to market and also reducing the cost. Those are two things I think banks really want to hear. 2014 seems to have been the year of the innovation lab. Every bank worth its salt has an accelerator and innovation lab in order to really foster development in some of these new companies. But what are some of the pitfalls of this type of arrangement?
I think that's a very apt question because, as you said, at the moment, everybody's setting up some sort of accelerator incubator fund. And there is a Me Too mentality that exists in the market at the moment.
You don't have one, you're not cool. Yeah.
Exactly. I think really there are three things to watch out for with these things. And this is based on my own personal experience of having run effectively technology strategic investments, formerly at UBS. The first thing is that generally they are set up to try and bring innovation into firms. They're seen as the route to innovation, but the reality is they're run as per a venture capitalist or as per an investment banking unit, i.e. they're looking to make a financial return on what they're doing. The second issue that most of both the banks and the early stage innovators come across is that generally procurement functions and control functions within banks are anti-risk. They don't want to bring risk in, and they see the early stage firms as bringing risk in. So they try and steer the internal business to larger organizations. If you get past those two things, then actually the third thing comes in, which is generally the businesses and the IT teams think of the early stage firms and the innovators as a large scale vendor and treat them like a large scale vendor. Actually, it has the wrong impact because they do lengthy proof of concepts. They make sure they adhere to all of their security and scalability requirements. And then they customize the application to within an inch of its life to fit their requirements. leaving the small company effectively unable to really innovate and get client number 2, 3, 4, 5, etc., which is really what's important.
It's almost like the structure is designed to destroy itself in a way. I mean, so what can be done to address some of these pitfalls then?
I think one of the ways and one of the mechanisms that are really important is, as I said, banks are very much anti-risk at the moment, and tapping into that part is important. We think that a strategy of working with a partner, a services partner, where there's a potential symbiotic relationship, a software firm brings the software, the services provider brings the people and the expertise around it, wrapping the service around it, and effectively the service provider takes the delivery and, importantly, the financial risk of working with the early stage firm and provides that service through to the end client. That is effectively why we span ourselves out from our previous bank to effectively work with the early stage firms to ensure they don't become captives in their own right and they can actually get client 2, 3, 4, 5, 6.
Excellent. So save our startups. So FP, we all know that sort of digital change is not unique to the banking industry. You know, it's happened in a lot of other businesses. Are there any lessons that banks can take away from how other industries have dealt with digital change?
Naturally, retail banks are looking towards the retail sector for inspiration or for technology innovation. Quite recently, we entered into the Citibank Mobile Challenge, where one of our team took 2 retail technologies to really change the way customers interacting with the bank itself, turning the experience into a real customer-centric retail experience versus the previous banking type of interaction. What's unique about this is the way and why we were able to do it, because we servicing the other sectors, we're servicing retail, travel, consumer, and everywhere else you start to see other technologies or other innovation, the way you're interacting with customers, which can be applied to the banking sector. So
kind of how other industries deal with loyalty and
Exactly.
customer service and cross-selling.
Exactly. I think that's the key today, because you need to, the banks, the way you're interacting with your bank, it is challenged by your experience in other sectors. People, the bar is much higher today.
Yeah, they're expecting the type of customer service they get from a John Lewis,
yes.
and they want it in Barclays.
And they get the typical branch experience.
Interesting. Okay, very good. Thank you, FB. Thank you, Mark. Thank you very much.